In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, another monster tech deal is official. Salesforce agrees to buy Slack for $27.7 billion in cash and stock. We will have details and reaction. Plus, the push for diversity, a new mandate from NASDAQ that companies have at least one woman and one underrepresented minority on their boards. We're going to hear from the head of West Coast Listings, Jeff Thomas. And Lucid's Desert Oasis, the EV maker, just finished a plant in Arizona ahead of schedule. With electric car stocks on a tear, we will get a picture of supply and demand with Lucid CEO Peter Rawlinson. But first, U.S. stocks started the month off by hitting records on renewed stimulus talks and COVID vaccine progress. And as I mentioned, Salesforce saying it will proceed with plans to buy Slack for $27.7 billion. With us now for more, Bloomberg's Abigail Doolittle. Abigail, Slack had run up quite a bit since reports of this deal last week. Salesforce had dropped. What are we seeing right now after hours?
Well, both shares are down. Slack has kind of been flipping between gains and losses, but Salesforce.com is certainly down as the acquirer. And you're absolutely right. There were reports last week, the idea that Salesforce.com would, in fact, buy Slack. And now, lo and behold, that is happening, as you just mentioned, $27.7 billion in both cash and stock. Some are wondering about the cash piece. Of course, Salesforce.com does have a lot of cash, so using it here for this deal. And I think the bigger thing to take a look at here, though, Emily, is the fact that Salesforce.com CEO Mark Benioff, he has made more than 60 acquisitions, as you know, in his 21 years, making Salesforce.com really this conglomerate of all these different pieces. So now they have this communications platform along with their relationship management software, making them once again a big competitor to Microsoft, giving them this extra bell and whistle, and perhaps we'll see whether or not that works going forward. Going forward, though, it's interesting because they also reported with this news. They beat in the quarter that they just reported, but the forecast going forward is slightly disappointing. Not all that surprising to see that happen. The company giving themselves perhaps a little bit of wiggle room around this. And as you were mentioning on the year, Slack at this point, because of this deal and the speculation of it last week, absolutely taking off. The deal price is about 55% above where the stock had been last week. And you can see just going up parabolically on the report. Now the news, a little bit of sell the news, but net up about 50% in less than a week. Not bad for those Slack investors and off that direct listing back in 2019, Emily.
So put this, Abigail, in the context of what we've seen in the broader markets today, given this, potentially positive news around stimulus as we head into the holidays.
So stocks didn't react too much to that possibility for stimulus. The news that there is a proposal for $908 billion of stimulus, far less than the $2.5 trillion that Democrats want. Another shot across the bow. Will it happen? But stocks clearly in a good mood on the day. The NASDAQ 100 up 1.5%. Apple really having a great day, up 3%. But it wasn't just big tech. It was also the small caps, not putting an all-time high. The NASDAQ did put in a record high, but the Russell 2000 having a respectable day, the cyclical sectors, the banks. So all in, you do have investors in a bullish mood. And Emily, I think a lot of it has to do with, of course, the vaccine. Moderna did fall on the day after soaring yesterday on the announcement that they are applying for FDA approval and EU approval. But we also have Tesla, the news that they are going to be added into the S&P 500 in one shot. That is certainly a bullish push for stocks. So net, the bulls are out once again. And right now, just a little bit of give back for Salesforce.com and Slack after hours. But investors, it'll be interesting to see longer term what the reaction is.
Absolutely. Bloomberg's Abigail Doolittle, thanks so much. We're going to talk a little bit more about that deal right now. Salesforce and Slack tying up, making it official. I want to bring in Groove CEO Chris Rothstein. Groove is a sales engagement platform. And Chris, you understand this space very well. We knew this deal was going to happen. We were just waiting for it to be sealed. Is this good for Salesforce? Is this good for Slack?
Thanks for having me on the program. Yeah, I think overall this is a really great deal. And as Abigail mentioned, Salesforce continues to execute their playbook. They've grown into being a highly diversified cloud company, and their past acquisitions like MuleSoft and Tableau have really started to pay off and are delivering results. And now they're taking on even bigger news and a bigger challenge by acquiring Slack and entering a market that previously they had not been a part of. And that market has some very large competitors. And that overall, I think, though, it's a really good move on both of their parts.
Now, Slack has been doing incredibly well as an independent company, and especially well in the midst of the pandemic. Do you see Slack on a continued upward trajectory, or would some of that growth, stop accelerating as we come out of the pandemic, as vaccines are successful, and as they continue to compete with Microsoft?
Yeah, I think they could definitely have an opportunity to continue to accelerate their growth rate, especially now with Salesforce helping them and putting the entire Salesforce kind of sales engine behind the company. And Salesforce already has relationships with all of these enterprises that they're trying to help. So that's going to be a big advantage and a big win. And probably part of the reason why you see the premium that was paid is they think that they can increase the growth rate, and they know Slack has a really good competitive product and offering, and they believe together they can grow even faster and generate a really nice return.
How big a competitive threat is Microsoft at the moment with their Teams product, and with Teams being a gateway to other Microsoft products?
Yeah, it's definitely a very real competitor. I was actually at Google when we were competing against Microsoft in the communication and collaboration space, and it's very hard. They're very good at what they do. The Teams product, you could argue if it's comparable to Slack exactly, but the way they offer it as a bundled solution, as a communication solution with email and calendar and everything else, it's a really competitive, hard competitive battle. And that's why I think it makes sense to team up with someone like Salesforce, where you can now get some synergies between the two, both from a sales perspective, but also from a product perspective, and they can work together to deliver more innovation and be more competitive in the market overall.
I'm reminded of Microsoft buying LinkedIn back in the day and how big a deal that was. What do you make of the personalities? Obviously, Mark Benioff has a big personality. Stuart Butterfield has a big personality. He's very vocal on social media. How well do you think that's going to work?
Yeah, that's a really good question. I feel like it can definitely work. I feel they've both. Stuart has always seemed to be very flexible, and the whole Slack story, how they pivoted to what they're doing. It feels like they've always been flexible and kind of just focused on continuing to build a more valuable company. And Mark has obviously proven that they can make even large acquisitions like Tableau, which was $15.7 billion, I believe, very successful. That was a well-established company, and it seems like that MuleSoft and some of these other ones like Velocity are going to be really continuing to grow, and a lot of those leaders are still helping out. So I think they'll find a way to make it work.
All right, interesting to hear your perspective, Chris, especially from your time at Google. Chris Rothstein, CEO of Groove, thanks so much for stopping by. We're going to be talking about this throughout the show. All right, coming up, diversity in the boardroom. One of Wall Street's biggest names to rewrite the rules. We're going to hear from Jeff Thomas, NASDAQ head of West Coast listings, next. This is Bloomberg. NASDAQ is joining Goldman Sachs in an aggressive push for more diverse boards at companies that want to list on its exchange. Under its proposal, most firms listed on NASDAQ's U.S. exchange would have to include at least one female director and one who identifies as an minority or LGBTQ. NASDAQ now seeking approval from the SEC on this proposed rule. Joining us now for more, Jeff Thomas, head of listings for NASDAQ. Jeff, thanks so much for joining us. What was the impetus to do this? This is not part of a national law of any sort. Why did NASDAQ decide to take this big step?
So NASDAQ's been focused on diversity for a while now. We've signed up for various frameworks like the Parity Pledge, the 30% Coalition, more recently, the Board Challenge. And so it's something we've been looking at as a while. As a national stock exchange, one of the key areas we have to focus on is the corporate governance standards for our companies. It wasn't so long ago, back in 2003, when we said we want to see the majority of directors be independent. At the time, that was kind of controversial. Now it's accepted as a norm. And so we felt like this is the right time now to put forward this new disclosure framework where all of our NASDAQ listed companies will have a consistent way to communicate their board composition, as well as their board diversity philosophy for all their stakeholders, including investors.
Now, there will be a public comment period. What kind of pushback are you expecting, and have you got so far from companies themselves who might say, look, this is a pipeline problem. We're trying, but it's really hard?
We did a lot of research on this issue before we put forward our proposed rule. We also spoke to dozens of organizations such as the ACLU, NAACP. So we feel really positive about the way we structured this rule filing. And we think that it's going to be a really nice way to be a first step in this journey to bring more diversity into the boardroom. We also announced today a partnership with Equilar, which has the largest database of diverse director candidates for our listed companies that don't currently meet the standard, so that they can join us on the journey to have a more diverse board.
Now, the way that the rule is written, NASDAQ has given companies an out. They can simply give some reasons why they don't have or meet these requirements and then move forward. Goldman Sachs, on the other hand, drew a firmer line. Do you think you might actually make this an official requirement? And what would be the impetus to do that?
Well, I think the one thing that everybody we spoke to about this agreed on was there's a lack of disclosure. And that's really the first step in addressing the issue, is making sure there's a consistent disclosure framework. A number of states have enacted legislation to require certain numbers of either female or diverse directors, but there hasn't been a consistent national framework. And so that's really one of the things that this rule proposal highlights, is it allows investors and all of company stakeholders the ability to see what companies have in terms of their current level of diversity and what their goals are for the future. So we think by taking the first step as creating a disclosure standard, along with a comply or explain framework, that's going to give companies the ability to articulate their position on this issue.
So then if this is a first step, do you see NASDAQ taking more steps?
Well, I think we've been on a journey for a long time in terms of what is the right structure for corporate governance for all of our listed companies. It's something we're always looking at. One of the big trends in the capital markets these days is the whole topic of ESG-focused funds and investments. And so investors now are looking for much broader disclosure from companies rather than just the financials. They want to understand how they're addressing things like the environment, society, as well as their governance standards. So I think this is really part of a broader trend of investors looking for more and broader disclosures from companies.
Now, I got to ask you about this Salesforce Slack deal. Obviously, you know, Slack is a listing that you fought hard for as the head of West Coast listings. What's your take on the deal and your views on software consolidation in general?
Well, if you look at what has happened this year due to the pandemic, there's been this huge work from home trade that's been on. If you look at the NASDAQ 100, we're actually up 40% this year versus 4% for the Dow Jones Industrial Average. Now, part of that's starting to reverse with the announcements of some positive results from vaccines from some NASDAQ listed companies. But overall, you can see that companies that are leading digital transformation and that are innovative in their sectors are the ones that investors are really rewarding. And now we're starting to see the next phase of that growth in terms of acquisitions of some of the high flyers.
When you talk to startups, how do you convince them that going public is the right way to go in this environment versus an acquisition?
Well, it's obviously something that every company has to decide for themselves. And so it used to be that there was a dual track where companies would look at IPO versus M&A. Now we're seeing the triple track with the emergence of SPACs. We've had over $50 billion raised on NASDAQ this year for special purpose acquisition companies looking to merge with private companies to bring them to the public markets. So there's now more ways than ever for private companies to access the public markets and the liquidity and the ability to raise capital that it presents.
NASDAQ will also be the home for Airbnb when it gets to the public markets later this month, potentially just a week from now. What are you expecting as we end the year in what seems to be a lot of pent-up demand for IPOs in this environment?
We have an incredible lineup of IPOs coming this December between Airbnb, Wish, Affirm, just to name a few. And I can tell you, we are already actively discussing with a number of companies that are targeting some pretty big IPOs in Q1 and Q2 next year. So we don't see any signs of this slowing down.
The long-term stock exchange, is that competition? There are reports and speculation that Airbnb could do an additional listing on another exchange that also claims to care about sustainability and long-term growth.
I think we're very aligned. We also have a very strong focus on long-term value creation. I think that's one of the reasons that we moved forward on this whole initiative around boardroom diversity. So I think any innovations in the capital markets that drives a longer-term mindset is a good thing.
All right, Jeff Thomas, NASDAQ SVP and head of West Coast listings. Jeff, always good to have you on the show. Thanks so much for stopping by. All right, coming up, Bitcoin hit an all-time high yesterday, just short of $20,000, but crypto rally sustainable? We're going to talk to someone who predicted the current price point next. This is Bloomberg.
Bitcoin is probably the hardest of all assets. It has a very restricted supply, even more so than gold has. And investors have finally tuned into the fact that this is a way of protecting the value of their money.
Bitcoin is being used as a store of value. People are worried that the central banks around the world are debasing fiat currencies.
You're seeing the demise of cash, and you're seeing more and more digital forms of payment.
It's been going up at a compound annual growth rate of 209% for 10 years. That's my forecast. I think it will keep doing that.
I'm not a strong believer in Bitcoin. You don't know who owns it. You don't know exactly how much exists today. There's nothing tangible behind it. At least when you buy an ounce of gold, you can deliver an ounce of gold to someone.
Bitcoin has been on a tear, despite what Gary Cohn says, reaching an all-time high just shy of $20,000. Bitcoin's recent success bringing a new outlook to the cryptocurrency market and spurring Wall Street to question whether crypto can actually rival gold. The Bloomberg Crypto Index, which is designed to measure the largest coins traded by the U.S. dollar, up over 50% since the summer. With us now for more is someone who correctly predicted the coin would reach all-time highs this year and still believes there's room to run. Sunny Singh, BitPay's chief on the phone. So, Sunny, how much more room is there to run?
Emily, great to talk to you again. Yeah, I think next year is going to be even more exciting. I'm going to give you another price prediction. I think Bitcoin hits 30,000 within the next 6 months.
Really? How do you get that number?
Well, I think that, right now you're having institutional FOMO, where 2 years ago in 2017 it was more the retail FOMO. Once Bitcoin gets past, I think, 21,000, there's very little resistance, and I think you're going to go to 30,000 really quickly. And I think in Q1 coming up, you've got a Coinbase IPO, which will be wildly successful. And when people see the numbers and revenue behind Coinbase, that's going to get people like E-Trade and Charles Schwab really jump in the space, and it's just going to create more and more excitement and buzz. I think you hit 30,000 pretty quickly.
What about the non-Bitcoin believers like Gary Cohn, who I just spoke to yesterday, who said for all the reasons it's successful, those are all the reasons it very well might fail?
Yeah, and he's welcome to short Bitcoin. That's what makes it great, right? And, people now, institutions are believing, hey, it's a good, hedge to the U.S. dollar now because the Fed's printing money now and all that, or it's a good gold trade. If you believe in gold, Bitcoin's a better trade than that because, gold, you can find another gold mine tomorrow and increase the supply, where Bitcoin, the supply is decreasing every year essentially, right? PayPal and Square are buying more Bitcoin than Bitcoin is being produced every day. So if institutions start buying more, which is obviously happening right now, you're going to see the price going up quite a bit. Now, again, the institutions, when I think when it hits 30,000, I think that's when they might start taking some chips off the table. And we've never had an institutional sell pressure before, and that might put the price, below 30 and push it back down to 20. That remains to be seen.
We saw Visa partner with a startup today called BlockFi to offer Bitcoin rewards. Do you see crypto moving in on credit cards?
Yes, I do. Visa and MasterCard have been great partners of BitPay. We've actually had a Visa card as well as a MasterCard card launch for the last couple of years, too, as well. So we see a lot of these cards launching all over the world, and the rewards are making it even easier now for people to get crypto back. So Visa and MasterCard have been very innovative, and they've been really accepted to these type of products, actually, and they've done a great job marketing these products around the world.
That said, this is your business. You have to think about the risks. What are the risks that you are most concerned about? What could slow this rundown?
The risks are always around regulations, and that's always been the problem that keeps me up at night, essentially, is what if the new administration comes in and just says, Bitcoin's illegal, or makes the rules so hard on exchanges doing money laundering rules and KYC rules, it becomes too burdensome for people to actually make purchases. And that's what I think is the big issue. But I think the regulators are actually working in the right direction, and knowing that crypto and Bitcoin is here to stay, and they're trying to work with the crypto companies like ourselves and Coinbase and really make sure they pass rules that are agreeable to everyone and still user-friendly for the consumers to keep coming back for more.
So this may be a rhetorical question, but what is better as a store of value, crypto, Bitcoin, or gold?
That's a great question, and honestly, it really depends on the users. I think the thing about, gold, it is a store of value. Crypto has many other uses. Some people look at it as a store of value. Some people use it as a currency hedge. Some people in Asia use it for remittance. Some people in Africa right now in Nigeria use it for payments for cross-border B2B. It has many different use cases for many different people around the world, and that's what makes crypto so great.
So what's going to be, where are we going to be this time next year, a year from now?
Well, again, I think the price will hit 30,000 pretty quickly, and then I think the institutions will start selling a little bit because now it is an institutional market. So I'm not really sure where it's going to end up after that. It could very easily hit 40. It could be back at 25. But I think somewhere between 20 and 40 next year would be very safe to say because, again, once, PayPal starts allowing merchants to start accepting crypto next year, what is, First Data, what is Stripe going to do? Okay. All these companies now are starting to enter the space. What's Charles Schwab, what's E-Trade do? The movement is now happening. You're seeing crypto, companies buying Bitcoin on their balance sheet now. So it's definitely here to stay now.
All right, Sunny Singh of BitPay. Thank you so much, Sunny. We always love your predictions. Coming up, the Grand Canyon State is becoming home to the electric car with Lucid Motors building a new factory from scratch. We'll take you there. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Saguaro cactus aren't the only greenery in the Sonoran Desert. Lucid Motors, a company which brands itself as offering luxury electric cars, has just completed an Arizona factory from the ground up in less than a year in anticipation of production starting next year. But when the assembly lines fire up, can Lucid keep up with demand? And with all the euphoria around EV stocks, will the company consider going public? Joining me now to discuss, Lucid Motors CEO Peter Rawlinson. Peter, thank you so much for joining us. So you built this factory in Arizona from the ground up in less than a year. How challenging was that to do in a pandemic, no less?
It presented many challenges, but I've got a hugely professional team on the manufacturing side. We were able to plan this very thoroughly from the ground up. And we planned it in phases. What you see is just phase one of the plant, which was constructed in under a year. That phase one is good for 30,000 units a year. But we have over 500 acres of land secured there. And we can take this to over 400,000 units a year in a number of years' time.
So let's talk about supply then. How many pre-orders do you have versus how many cars you believe you are able to make each year?
We are very blessed. We have a bulging order book. We have many, many thousands of pre-orders. And the bulk of those have got very significant deposits associated to them. So they're very real pre-orders. We're going to build up production in a very progressive manner, starting with really focus upon quality. We're not going to churn out numbers of these cars to start with. Get the quality right and just gradually ramp up the volume until we can hit about 30,000 plus units per year at that phase one stage of the plant.
So does that mean that you're not going to be able to meet as much demand as you have initially?
I think it's nicely balanced. I think we can meet that demand. Initially, it's going to take us a little while to get through those pre-orders. But remember, we're going to, as we grow our volume, we'll be bringing in successively more attainable versions of Lucid Air. So that will just balance the demand and our ability to manufacture. So remember, we start with the amazing Dream Edition, which this is not a virtual studio, not a virtual background I'm in here. I'm actually in our Beverly Hills flagship studio. And behind me, this golden car is an example of our Dream Edition. We're starting with that in spring of 21, and then hot on the heels of that, bringing in the Grand Touring car at $139,000. After that, late next year, Touring at $95,000, and early 22, the car we're all waiting for. That's the Air Pure, or if you like, the Pure Air, the Pure version, the mainstay of the range, and that will be under $70,000 with the federal tax credit.
Now, you've said you're going to announce your international expansion plans. What are those plans? Your biggest backer is the Saudi Public Wealth Fund. Will we see you build a factory in the Middle East?
We've got great plans that we're putting together right now, and we hope to be in a position to make a formal announcement early next year of what those plans are. We want to do something really meaningful for the Kingdom of Saudi Arabia, and we're going to really be a catalyst in their transition from fossil fuel dependency. And I think that is just a major step that a country which is so renowned for its fossil fuel-based economy is going to make this bold step to renewable energy and renewable transportation. And then later, we have plans for a plant in China.
Interesting. Plans in China as well. A factory of the
Indeed.
same size?
Indeed. But our gold
I want to talk to you. Okay.
Arizona. I would always say that Arizona is our sort of spiritual heartland, and our gold standard factory will be Arizona, and all the processes that we perfect there then can be cascaded out to plants elsewhere in the world.
Now, last quick questions. EV stocks have been on a tear. Do you feel that we are in an EV stock bubble, and how is that impacting your plans to go public?
Well, I think we have to be very careful how we view this. With following on the success of Tesla, there's been a whole phalanx of EV startups, many in the West Coast. And what I see is a lot of startups, a lot of them going public. I don't see technology. Cut us to the core. Lucid is a tech company. We have world best, world leading technology. And it's always been our plan to go public at some time. So please watch this space.
All right. Peter Rawlinson, Lucid Motors CEO from their showroom in Beverly Hills. Thank you so much for joining us. Coming up, only 43% of venture capitalists say investing in multicultural founded companies is a priority. We're going to speak to Morgan Stanley Vice Chair Carla Harris, who's hoping a new diversity report can shed light on a $1 trillion blind spot. That is next. This is Bloomberg. As we covered earlier, NASDAQ, Goldman Sachs, and a number of major tech companies are pushing for more diversity on their boards. Meantime, a new report by Morgan Stanley has shown that the intensified dialogue around race inequality has captured investor attention and shifted strategies significantly. But while the results seem encouraging, it has also found the change in attitudes is uneven. Traditional VCs are still less likely to be women or multicultural. from multicultural-led firms. Joining us now to discuss, Carla Harris, Vice Chair and Managing Director at Morgan Stanley. So, Carla, your report sheds light on what you call the trillion-dollar blind spot. Talk to us about the gap, the continued gap that there seems to exist between talk and action.
Absolutely. Well, I'll tell you, I'm encouraged by this report, frankly, Emily, because it does show some progress from this time last year. And I do think that the Black Lives Matter movement, as well as the broader social unrest on the back of racial inequities in the country, has changed some minds. In fact, that's what this report says. It says that VCs are now more likely to consider investing in multicultural entrepreneurs, in fact, 68%. But the thing that was really exciting to me, frankly, was that 75% now say that they believe that you can invest in multicultural entrepreneurs and still do well and have outsized performance. And that is huge, because if you remember 10 years ago, 15 years ago, when people first started investing around ESG, there was this whole question of whether or not you could do well while doing good, and I think to have this admission now is a big deal. Now, no question, there is still a huge inequity because, as you know, reports show even in 2019 that women received less than 4% of traditional VC dollars and people of color less than 2%. But the fact that the awareness has shifted in this last 12 months, I'm very optimistic about what we might see this time next year when we do the report, especially given the other things that the report talks about with respect to people now being more aware of the performance in their own portfolio of the companies that they have invested in with multicultural entrepreneurs. For the most part, these companies are doing better in the portfolio. So just paying attention and the awareness, I think, is going to make a difference.
So what's your thought on the NASDAQ move today requiring companies to have a woman and a person of color on the board, but not making it a rule? Companies can simply explain why they don't have one and still move forward, though certainly putting the pressure on.
Well, I think, frankly, it was a profound and provocative statement. When I read it, the first thing I thought was, wow, #leadership, right? Because they are an important player in the ecosystem. And for them to make this statement and to say that they're, frankly, going to advocate with the SEC to make it a requirement and to put that out there, I thought showed real leadership. And I think it will certainly accelerate the change.
Now, at the same time, we're seeing companies in Silicon Valley. I don't know if you're familiar with the Coinbase controversy, where the CEO, Brian Armstrong, has said they're not going to take on activism around social causes that are not directly tied to cryptocurrency. A number of African-American employees have left. A number of other employees have left. At the same time, you see evidence that we're moving 2 steps forward. There's evidence that we're moving 3 steps back. How do you not let that some of these more pessimistic developments hold you back?
Well, in full disclosure, Emily, I'm a glass half full kind of gal. And the fact that company after company has come out and made a statement around what they stand for with respect to, their focus on diversity, inclusion, and equity, and then belonging, and that they are actively trying to do something about it, I think that far outweighs that one instance. And here's the other thing that makes me optimistic, Emily. I frankly think that millennials and Zers, which are largely becoming the dominant population in the workforce, they're going to turbo boost that which boomers and Xers have tried to do for the last 20 years, because their idea of excellence is to see multicultural folks in positions of leadership and also people who are on boards. That's their idea of excellence. They have seen women lead, and they have also been in institutions where they've had a smart Black kid on the left, smart Hispanic kid on the right, smart Indian kid in front of them, smart Asian kid behind them. That's what excellence looks like. Whereas 30 plus years ago, when I was walking out of Harvard Business School, excellence in corporate America was, frankly, 6 white men at the top. Pick the company. That's just what it looked like. So you knew as a person of color that if you wanted to play, you had to be comfortable being the first and the only in many rooms. That is not the case for what millennials see as excellence in corporate America. And they want to work with companies that are aligned with their values. And if they don't see it, they won't go. And if they go, they won't stay. And that will compromise any company's objective of being the employer of choice.
What about in the federal government? Joe Biden's economic team is rounding out. What do you make of his cabinet picks so far?
One word for you, Emily: exciting.
Exciting, why?
Well, because it's diverse. And one of the things that I've said a lot in public is that as a leader, you should avail yourself of all the talent that is in the marketplace. That if you have homogenous thinking at your decision-making table, you are likely to have a gap in your go-to-market strategy. So in order to make sure that you're serving all of your customers, all of your constituents, which, by the way, in this country happens to be a diverse population, you need to make sure that you are availing yourself of all the diverse thinking. So I'm actually excited about what I've seen so far.
Carla Harris, so great to have you on the show, and thank you for your work, Vice Chair and Managing Director at Morgan Stanley. Thank you so much for joining us. Still ahead, Twitter was one of the first companies to work remotely in the midst of the global pandemic, but don't expect them to be the first to return to the office. I'll discuss with Twitter CFO Ned Siegel next. This is Bloomberg. We have some breaking news out of Texas. Cases of COVID-19 in Texas have risen by more than 15,000. That is a huge jump, breaking the record in daily new cases. Of course, as we know, cases have been continuing to rise across the country and around the world, something that we are, of course, continuing to follow. Now, even before the coronavirus outbreak hit in the United States and offices closed their doors, Twitter was preparing for a future that relied heavily on remote work. I spoke earlier with CFO Ned Siegel at Bloomberg Sustainable Business Summit about whether he feared for the future of productivity in this new normal.
This was a decision that was really separate from the global pandemic. So for a couple of years, we've sought to decentralize our workforce. And what that means is we love the places where we have our 35 offices, but we don't want to be tied to those as we grow our team. Some people are more productive on their sofa in Montana, and others are more productive in an office because of their personality type, because of their job function, because sometimes of where the rest of their team sits. And we wanted to make sure that we could leverage technology and tools to allow people to work where they can be most productive. Now, this work was well underway, but substantially accelerated when we all were sent home in March. It gave us real empathy as leaders, as a guy who went into the office in San Francisco every day, for what it was like to not be in the room, to know what it's like when your internet is being used by your children for school and you're competing for bandwidth, to know what it's like to go hide to do a call or an interview that's important. And so the empathy that we've built through that has helped us design processes, create new tools, licensed tools from partners to make sure that people can be productive. So far, we're really pleased with what we've seen from a productivity perspective. That doesn't just mean, though, that we're shipping as fast as we were before. It also means that we've found ways to adapt to allow people to do their best work despite all the challenges that COVID has created.
So does that mean things are moving less quickly in some ways in terms of productivity?
No, I don't think they're moving less quickly, Emily. At the same time, I think it'll be years before we really know what the true impact is of this time period. For example, right now, 9 or 10 months in, a lot of the work that's happening at Twitter is based on things that we had started earlier. And so we are working really hard to create the space for people to be creative, for them to come up with new ideas, for them to have hallway conversations, albeit over a screen, so that they can benefit from the interactions that they need with their colleagues in order to create the next great feature or function on our service.
So when the safety and the health issues end, when there's a vaccine, how many employees do you think will actually go back to the office? What percentage of Twitter will work in the office versus working at home?
Well, we've surveyed people a number of times. And what we found from the surveys is a lot of what you get back has to do with where we are in the cycle of shelter in place, where we are in news about a vaccine, and a lot of other things that are going on in people's lives. Are their kids in school or are they home for the summer? And so the broader takeaway when we step back from a little bit of the noise that you get from one survey versus another is that people really value flexibility. They want to be able to work in the office sometimes, and at home or another place other times. And I think that's something that hopefully we all take away from this environment is more flexibility and allowing people to work where they're most productive. I don't think we'll really know what that will look like, though, Emily, until we're far past a vaccine and people have come back to offices and seen what it's like to have choice, as opposed to now where we don't really have much choice.
Now, there's running the daily business of Twitter, and then there's the fact that news, every crisis, every controversy seems to also unfold on Twitter. How does that influence your day job?
Well, it influences it a lot for all of us. But thankfully, we've got a really strong policy team, a really strong product team, a really strong infrastructure team, all of whom are critical to making sure that Twitter's there for people, to make sure that in those moments that we're enacting our policies quickly and transparently, and to make sure that the product works in a way where people can find the things that they go to Twitter to look for.
Now, younger generations, many newer hires perhaps, are increasingly cognizant about sustainability and social issues. Obviously, the Black Lives Matter movement has been incredibly powerful and incredibly important over the last few months. You know, Twitter has historically been very active on these issues, showcasing these issues, addressing these issues within the company. Where is Twitter on that today, and how do you make sure that those issues stay relevant?
Well, the issues of sustainability, of respecting the environment, good corporate governance, these are things that are important to us as leaders of the company, but they're also so important, as you alluded to all of our stakeholders, whether it's an advertiser who wants to align themselves with a platform that they can be proud to have their ads serve on, content owners who want the highlights from their events showing up on a service where they can be proud, or the people who use the service and our employees and shareholders. And so one of the things that we know we need to do a better job of is to bring all this work that we do in support of those goals together for people to see in a cohesive way. We give employees $2,000 of matching funds to support the nonprofits of their choice. We invested $100 million, we announced a couple weeks ago, into low-income communities in the United States. We are working in other ways, whether it's destaggering our board, which we announced a few weeks ago, or buying carbon offsets for our data centers and our flights to support the environment.
Interesting conversation there with Twitter CFO Ned Siegel. You can catch more of that online. Meantime, I want to get back to the biggest story of the day in tech, of course. Salesforce agreeing to buy Slack for $27.7 billion. We've been listening in to the conference call, Mark Benioff calling it a marriage made in heaven. Bloomberg Tech's Chom Giles joining us now for more. So, Chom, we're getting more details on the deal. And I guess the big question is, a deal of this size, a company of the prominence of Slack and the importance as we have continued to work from home, is it going to work?
Yeah, it's a major deal. In order to answer your question, in order to make this work, what Mark Benioff is going to need to do is really enable Slack to continue to have its own personality. Slack has a very definitive user interface. It's very popular with the companies that do use it. I think what you're going to want to do to keep Stuart Butterfield happy, the CEO of Slack, to keep his staff happy, and to keep customers happy is let Slack be Slack and not feel like you have to fold it into every piece of software at Salesforce. You want it to keep its distinct personality. And that's something that executives like, including Aaron Levy, a frequent guest of yours, is saying that on Twitter right now, is making that point. You don't want to create something that's going to get folded into the Salesforce board. Remember that Salesforce had its own sort of comparable workplace productivity chat called Chatter, and it really, people just haven't been thrilled with it. I haven't used it, but we talk to people, we read the responses from people. Chatter did not take off. It really didn't resonate. And so Salesforce recognizes that in a time of work from home, people are looking for email substitutes. They're looking for a way to communicate, to collaborate in an efficient way. people really like Slack. And so he recognized that this is a product that works. At the same time, Emily, you have to look at, why did this happen now? If Slack is so great, why did it sell out? Remember that Slack, we broke the news a couple of years ago that Amazon was looking at Slack. Other people have reported that almost every big tech company at one stage or another has looked at Slack. Why did Slack hold out for as long as it did? I think what you're seeing right now is Slack recognized that competition from Microsoft Teams is really starting to gather pace. You saw earlier in this year, Slack was rising, but now lately it's been on a declining trend, and I think that's a function of Teams.
Interesting. Tom, you answered my next question. Certainly something to continue to follow. We talked about the personalities of the people involved earlier, but you mentioning the personality of Slack, also a very good point. Bloomberg's Tom Giles, thanks so much for giving us that update, and thank you all for watching. That does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Bloomberg Daybreak Asia coming up next. This is Bloomberg.